If you're using the weekly candle strategy and still losing on the 5-minute chart, this video is for you because the problem isn't your bias, it's when you're entering. Let me show you the one mistake that's killing most weekly candle scalpers. The weekly candle gives you direction. The 5-minute chart gives you speed. So most traders think if I just combine them, I should win. But what actually happens? Price sweeps the weekly level. Traders instantly enter. The market reverses and your stop loss is hit. It looks right, but it's still wrong. Why? Because you're entering inside the trap. The weekly candle doesn't tell you where to enter. It tells you where liquidity is sitting. Weekly highs and lows are where stops live, are where institutions hunt, are where fake moves start. Price must take liquidity first before the real move begins. No sweep equals no confirmation. This is what happens to most traders. They see a weekly high taken and they immediately enter. After the weekly sweep, price must show either a CISD break or fair value gap inversion or displacement back into the weekly range. This is what releases direction. The weekly candle sets the stage. The entry signal tells you the show has started. 5-minute execution, tight stop, clean risk, aligned with the weekly bias. This is how scalping becomes professional. Let me show you how this works on the charts. Here we are on the charts. As you can see on the right, I've got my weekly candle and at the same time, I've got the 5-minute candles showing. So I've got the higher time frame and the lower time frame showing at the same time. I'm using an indicator called SMC X. If you'd like to know more, just click the link below. First thing you want to do is mark the previous week's high. So you can see if this is the current weekly candle and this is the previous week's candle, we want to mark the high of the previous week's candle. And this becomes an area where we want to pay attention to because liquidity is resting in this area. So whenever price comes into this zone, you can expect some kind of reaction, but you have to always wait for confirmation. So let us wait for price to get to that high point. There we go. Now price has swept the highs, but it has not come back into the range. What most traders do at this point is that they'll enter their short position as soon as price breaks above the weekly candle. They'll just simply enter short, stop losses above the high and their targets down here. And then let's play this on. And then they get taken out of the trade. And that is a losing trade. So always you want to wait for price to come back into the range. When price comes back into the range, we have a failure to displace pattern. And there you go. You can see right now price has come back into the range. If you look at the weekly candles carefully, you'll notice we get this failure to displace pattern. This candle high is not able to displace past the body of the previous high. And then SMC X indicator automatically marks our CISD level. What we want to do is we always want to wait for price to break the CISD. There you go. So you can see price has broken the CISD. So now this is where we look for an entry. Stop losses can go above the weekly high and then we can target the next liquidity range. This is a liquidity range over here. So this becomes our target. So let us play this out. And there you go. Target is hit. This is a 1 to 1.9 trade, very successful. But the point is, you always want to wait for confirmation, and confirmation is when price breaks the CISD. So let us keep playing. We wait for price to come back to that weekly high level again. If it comes back, we can look for another trade. So there you go. Price has taken out the highs of the weekly range again. You can see we've got a sweep occurring, but now we need price to come back into the range. And there you go. Price comes back into the range and we get two CISDs that are formed. CISDs are the candle or series of candles that causes the sweep. And since we had two sweeps occurring at this weekly level, we got two CISDs. All we want to do now is wait for price to break the CISD, either the first or the second, and we can look for an entry. So we're just waiting for price to break that CISD level. And there you go, price comes back into the range. So you can see how the CISD keeps you safe, Okay, let's keep looking. There you go. Price comes back into the range and now breaks the CISD. And now we can look for our entry because you can see it's broken 3 CISDs at once. So we can look for our entry. Stop loss can come just above the weekly high. And then we can target the lower liquidity areas. We have a few different areas to target. This is one area we can have a target. And this is another potential area. So we just want to look at these swing lows. And this is another potential area. So we could target all of them or just one of them or two of them. It's up to you. All right, so let's play this out. So you see now price broke the third CISD. So you could have looked for another entry right now. But let's play this out. So you can see the first target is hit, second and third target. Here you go, second target is hit. Is it going to hit our third target? And there you go. All 3 targets are taken out. Another successful trade. This would have been a 1 to 1.89. If we targeted all 3, it would have been a 1 to 2.31. Very successful trade. The hardest part isn't knowing this, it's executing it live. You need to track weekly levels, identify sweeps, wait for CISD breaks, and avoid FOMO. That's where most traders fail. That's why I use the SMC X indicator. It marks weekly highs and lows, detects sweeps in real time, and highlights CISD levels. It stops you from entering early and keeps you aligned with the weekly candle. If you want to trade this model with clarity, I'll leave the link below. In the next video, I'll show you one concept which is really like a trading cheat code. It's a huge smart money hack. Watch it now, click now.